Hello ladies and gentlemen, my name is Andrew Wagner. We are on a time limit today. My camera's only got 15 minutes worth of footage, so we're going to get right into this. That being said, if you're an audio-based learner, this video itself will be a great template. If you learn best by reading notes and or WordSpark or whatever that thing was used back in high school with cheating written exams, I will be leaving a Google Doc folder in the
Here's what I found.
a Google document based folder in the description in the top link. So that being said, we're going to get into this. We're going to be doing a terminology today. This is the basic information that I will be using from here on out on all investing terms. The brokerage firm itself would be Bloomsburg, would be the professional based. I do this for a living. I work in New York City and do all that. But we will be using the Robinhood and Webull. TD Ameritrade's another one, but that's more of an upscale version of what we're going to be using. Has other complications. Everyone has a little bit different nuances and different uses to it. The Dow Jones is the industrial average between the stock market based on it's pretty much what we're looking at every day. NASDAQ. Once again, I'm not going to be able to go over all this in 15 minutes, but NASDAQ, New York Stock Exchange, this is a pretty common one you'll see. So S&P 500 is the 500 largest capital gains in the New York Stock Exchange. All corrections will be dubbed over what I'm saying. So that being said, we're going to keep going on to this. The ticker symbol is going to be, when you go to look something up, if I say Ford Motor Company, you're going to be looking at $, and that's how you search for everything, $F in that example, or Apple, $AAPL. See what you did there? We're going to be going into diversification. That is a technique used to not put all your eggs in one basket. So if a stock does go tits up, then you're not completely wiped out. This is so important once you get into managing your money. The PDT trade rule. This is a hard one. This is a pattern day trading rule. So small accounts under $25,000. Yes. On Robinhood has a little bit more leniency than everything else, but you can only buy and sell that trade, and then you have to wait that day plus 3 others to make your next trade. That is done on almost all accounts. Robinhood is a little bit more lenient on this, and this is why we're going to be using Robinhood for these small accounts. If you mess this up, this is a serious violation, and you are banned for 90 days. So we're make sure we take our time and pick our trades wisely. Getting into the next one, cryptocurrency. This is based off of the Bitcoin and BitConnect currencies that popped up in the early 2010 to now. These are the idea that the fiat money system will be running out and the potential for that. I am not an expert in this, nor do I try to be. I advise heavily against this for this reason. If you want to spend your time and learn this, by all means go for it. It is under a different tax code in which I do not understand and I do not want to mess with at the end of the year. Got it? Margin accounts. Margin accounts is basically leveraged accounts in which you pay a percentage on every dollar you borrow. And so you will have your initial investment plus the margin that you invest into said accounts. So yes, it is a fun way to lose a lot of money very quickly. When you do involve a margin account, whatever money you lose, because you will lose your initial investment first and then drain it that way. So you the risk of losing 1.5 to 2 times the amount of original money you invested into said company. I will not let you do that for that reason alone. 5 minutes in. Index funds is a collective group of a fund in which they are categorized into a specific sector. We're going to be using these two a lot. So we're going to need to understand what they are. ETFs, don't remember the abbreviation, but it says on the screen right now, so bear with me on this. Sectors, this is the idea of currency is one sector, crypto. You got your oil, gas, manufacturing, automotive, technological, bio, the list goes on and on. So we're going to be focusing on a few separate sectors. This is stuff that I understand and I can read off the back of my hand. If you understand a different sector than me quite better, then by all means you want to specialize in that. And believe me, once you find your niche, excuse me, it becomes much easier for you to make money, read patterns, and understand, hey, this is what the stock will do, this is where it will rebound at, here's what complications I have in this sector, and by all means, this becomes easier as time goes on. Earnings, this is done quarterly, I believe, by most companies, going on how much they earned. This will be done over a conference call between, how do I explain this? Earnings time is heavy volatility, and leading up to it, there is priced in stocks, so you understand that, hey, this is probably going to do a lot better than everyone thinks. So people will make bets on if the stock did better or worse than earnings, and the stocks will fluctuate based on that. So high volatility in that time, so that's something to look forward to. Dividends. So say Coca-Cola, Disney, and stocks like that, IPO, initial public offering. This is the first time that us as common traders have the ability to buy said stock. This may happen on any given day. Initial public offering is a free-for-all in the first X amount of time. So, that being said, you saw Facebook was one of the first ones that tanked off of the initial public offering way back when. Since then, it's gone up a lot. Snapchat started at $22, made its way up to 26, and fell back down to 21 or so on the same public offering day. There's huge money to be made right here, and if you buy in at the right time, you can sit and hold on to it, or get free scalps. Oh man, I'm gonna have to go a lot longer. Trading. Paper trading is a simulation-based trading, in which there is no hesitation. So there's no execution and fill time. Obviously, this is great to get your feet wet and give you the simplicity while giving you the understanding of what the stock market has to offer. But at the same time, it's not real. There's no fear. There's no attachment to your money. Market cap. Basically, this is all the stocks combined, and this would be the net worth of the company as it sits on that given day. Okay. Limit order is the philosophy in which you base your, I want to buy a stock at $26. I'm going to put a limit order on 26 instead of using a market buy, in which the next soonest order will be given to you. Dollar cost averaging. This goes hands in hand with diversification, but say you're down on a trade and your trade, you want to buy in more. Say you bought originally the price of for $10, and it sank heavily since Corona hit. Say you have the opportunity to buy it at 5. Highly unrealistic, but this would make your underlying average to be $7.50 if you bought the same amount of shares as you did before. And if you keep doing this, you can make your cost per share lower than what you originally invested for. Huge way to dig yourself out if you get in trouble. Hence why you diversify, you don't stick all your eggs in one basket, and whatnot. The last two terms we're going to get into are the level 2s, which is a real-time indicator of the supply and demand market of which said stock you are looking at. On Robinhood, it's going to look like this. On other brokerage firms, it's going to have the physical number with the price going all the way down one side, the quantity in the hundreds, and then the sell category, all being done in real time. This fluctuates at a really fast speed. So that being said, you're going to see the quantity or the amount of orders jump heavily, and if at a higher skill level, you're looking at that and being able to determine how much where the resistance is in said stock. I'm not going to get into that off the bat, but that's something to really consider in the future time. And market order, or market price. It is the on-demand value, or at the value of said stock at that given time. Anyway, that's it for this time. We're going to be looking at my actual live account, and we're going to be looking at real-world examples of what I go to look for when I pick out some of these stocks, as well as what stocks I'm looking for. Thank you, and looking forward to seeing you in the next one. Bye.